The $300 billion secret AI economy. Why BMNR stock is the ultimate play. In my opinion, the current market turbulence, fueled by what Fundstrat's Tom Lee accurately describes as an overdone AI fear trade, has created a profound dislocation that is obscuring the most consequential infrastructure evolution since the commercialization of the internet. And at the very heart of this revolution sits a single, misunderstood asset, Ethereum, and by direct extension, Bitmine Immersion Technologies, BMNR, as its most powerful corporate proxy. While nervous investors scan headlines and speculate about worst-case scenarios, they are completely missing the quiet, relentless construction of a new digital economic layer. One where the $300 billion secret isn't secret because it's hidden, but because it operates on a technological plane that traditional market analysis struggles to quantify. The thesis is remarkably straightforward yet overwhelmingly powerful. We are witnessing the simultaneous maturation of three exponential trends: the tokenization of real-world assets, the explosion of the stablecoin economy, and the dawn of autonomous AI agents. And all three converge on the same immutable, decentralized settlement layer, Ethereum. Let's dismantle the fear first. As Tom Lee has correctly diagnosed that markets bottom on despair, and the recent viral pessimism surrounding AI is the sentiment capitulation that precedes the next leg up. The bears are making guesses about hypothetical demand saturation, but the data tells a story of structural, non-negotiable spending. As institutional analyses from T. Rowe Price and Brompton Funds confirm, the hyperscalers, Microsoft, Amazon, Google, and Meta, are engaged in a capital expenditure supercycle, pouring hundreds of billions into AI infrastructure, not as a speculative bubble, but as a fundamental retooling of the global economy. This isn't the dot-com era where valuations detached from profitability. Today's AI leaders are posting record profits and returns on equity that justify their market weight. The S&P 500 itself has been reshaped by this force, with tech-related names now dominating its top echelons, and the index effectively becoming a proxy for the U.S. tech economy. To be pessimistic on AI is, therefore, to be pessimistic on the structural advantage of the entire U.S. equity market. This is the macro backdrop against which the micro story of Bitmine must be understood. Now plug Bitmine directly into this equation. The company, under the leadership of Tom Lee, who serves as its chairman, has executed a strategic pivot of staggering clarity and conviction. It has transformed from a blockchain technology firm into what is effectively a publicly traded Ethereum Treasury operation, amassing a colossal holding of over 4.3 million ETH, currently valued at approximately $9.2 billion, and contributing to a total treasury of $10 billion, when including cash and its strategic stake in Beast Industries. This is not a passive bet. It is an active, calculated accumulation of what the CEO of Beast Industries correctly identifies as the backbone of the future financial system. Bitmine is essentially front-running the inevitable migration of institutional and machine-to-machine commerce onto Ethereum's rails. The bear case will point to the stock's volatility, the recent 30% drawdown in Ethereum, and the authorization for a massive share increase as signs of distress. But this is a myopic view that mistakes short-term price action for long-term value creation. The share authorization provides strategic flexibility, and the price drop in ETH is precisely the accumulation opportunity that patient capital has been waiting for. A chance to own a levered play on the world's most productive blockchain at a discount, especially as the company launches its Made in America validator network, projected to generate $374 million in staking rewards, turning its ETH holdings into a cash flow generating machine. The true catalyst, however, is the emergence of the AI agent economy, a theme that dominated discussions at the recent Consensus Hong Kong conference, and is the single most important development no one is talking about. We are moving beyond human-centric internet usage into an era where autonomous AI agents will perform tasks, negotiate services, and transact with each other on our behalf. The critical question is, how do these agents pay for things? They cannot open bank accounts, they cannot use credit cards designed for human legal identities, and they cannot operate within the traditional, permissioned financial system. As CoinFund's CEO articulated, AI agents will inherently prefer cryptocurrency because it is programmable, permissionless, and allows them to possess their own wallets and execute microtransactions without human intervention. This is where stablecoins, the $300 billion plus settlement layer, become the native currency of the machine economy, and Ethereum becomes its central bank. Companies like Coinbase are already building agent wallets. Stripe is enabling stablecoin payments to AI, and new platforms like PengoPay are launching protocols like Agent Pay specifically for on-chain AI transactions. This is not theoretical. It is infrastructure being laid today, and it is being laid on Ethereum. Therefore, the mainstream financial narrative that has Ethereum lagging behind Bitcoin or Solana in this cycle is missing the forest for the trees. Ethereum lost the meme coin mania to Solana, but it is winning the war for institutional and enterprise settlement. The tokenization of trillions of dollars in real-world assets, from treasury bills to real estate, is choosing Ethereum for its security, decentralization, and liquidity. The stablecoin economy, now exceeding $300 billion and poised for exponential growth as regulatory clarity emerges in jurisdictions like Hong Kong and Singapore, conducts the vast majority of its settlement on Ethereum. And as the Consensus Conference highlighted, the encryption industry has made its choice. The path to survival and growth is to bind its fate to the AI revolution, and the only chain with the battle-tested robustness to serve as the settlement layer for a global network of autonomous agents is Ethereum. The very fact that the market is currently unable to price this AI trade correctly is the opportunity. Wall Street knows how to value a company's earnings next quarter, but it has no model for valuing the rails upon which an entirely new species of economic actor, the AI agent, will transact. This brings us back to Bitmine. By accumulating the largest corporate treasury of Ethereum and building the infrastructure to stake and validate that network, BMNR is not just another crypto stock. It is a direct investment in the computational and financial layer of the AI future. The $200 million deal with Beast Industries, a company helmed by a CEO who publicly articulates the Ethereum as backbone thesis, further cements this alignment. When the market finally realizes that AI's diffusion phase requires a digital economy for the agents it creates, the scramble for exposure to the base layer of that economy will be unprecedented. Analysts like B. Riley, despite lowering price targets in a volatile market, maintain their buy rating, recognizing that companies with recurring fee-generating operations like staking will achieve more durable valuations that decouple from the underlying crypto volatility. In conclusion, the fear gripping the market is a transient emotional state, a refusal to believe in the exponential because the linear mind cannot grasp it. The spending on AI is not stopping, it is accelerating. The US and potentially China are locked in a technological arms race to dominate this new frontier, and the S&P 500 sits at the center of this gravity well. Within that index and on the Nasdaq where it trades, BMNR offers a unique, concentrated, and leveraged bet on the specific infrastructure that will power the autonomous economy. While others see a crypto sell-off and an AI correction, I see Bitmine systematically accumulating the asset, Ethereum, that will serve as the settlement layer for trillions in stablecoin transactions and the operational backbone for millions, if not billions, of AI agents. The secret AI economy is not the chatbots or the image generators. It is the invisible, decentralized financial grid being built on Ethereum, and Bitmine is the public market's most direct and powerful connection to that grid. The market's current inability to price this thesis is not a sign of its weakness, but the ultimate confirmation of its asymmetric potential.